मैंने उसको बोला भाई 6:30 को आ, क्योंकि 7 o'clock को
We are live.
Hello guys.
Yes, morning or good afternoon.
Good afternoon.
Good afternoon. Quite morning. Nifty is
Huh.
not doing anything.
Yeah.
It's a weekly expiry for the options and the bank and the
तो maybe last hour
IT.
में reaction आएगा.
I think there would be some reversal. Actually, if you see yesterday's FNO, there has been some of the call unwinding, which has already happened. So, and now if you look at the FNO for the second week where the buildup is happening, you have good support coming at 25,000 for the uh, for the input and 25,200 on the upside. So the Nifty is basically so it's a narrow range which is happening for the Nifty.
Correct.
But
IPO, Smartworks.
10-12%, okay. Means my view is that if you compare it with the existing IPO, means existing company which is a competitor Office, it's slightly expensive for me because it's not profitable in that sense. For last 3 years, it's not been profitable, and while it may be generating cash in the operating level, the kind of asset heavy model they have, it's not generating EBITDA or net profit.
Describe the asset heavy model.
They take so they are into co-working spaces across 50 centers, 15 cities, and
So they are larger than Office.
in some way, yes, it is. But look at they mainly cater to the small and medium enterprises. So if a company wants 300 seats in 10 cities or 5 cities or something, they take 10 seats here, 20 seats here. That kind of split. They do it, and they cater to that segment where a small and medium enterprise doesn't have to pick up an office in multiple cities.
Correct.
I'll pick 10 or 20, 30 centers in the seats in one space, and they make that for them. But they do the leasing thing. So when you do the leasing thing, then you have to pay for it, right? In the case of Office, even Office started off like that. Actually, WeWorks also started off like that. But Office has now pivoted towards asset light, where they go and say that okay, with the developer they do some kind of initial work, and then they share the entire revenue. So in that sense, it's a net of things which is coming to them. So it's just a management kind of model which they do. The developer gets his share with the minimum guarantee or which is there, and they get their revenue. So, and that's why Office is profitable in some way, and Smartworks is yet to make profit. But though they are claiming that in FY26 they should be profitable in some form, at least in the operating level which is there. So yes, 10-12% gain has happened. It's a space which is fast developing, and so there is a demand for it. 13 times is this kind of subscription that happened. 407 rupees per share was the thing. So 436 is what I saw the last price was.
Sorry, but I'm not able to fully understand. So they do their capex. They don't acquire property, of course.
They don't acquire property. They go to
they lease it. They do long-term leases.
The average tenure of their clients is 45 months.
Correct.
So roughly around 3 to 4 years kind of thing. Now Office would
And they take that property on long-term lease.
Yeah,
they take it also on
long-term lease.
Got it. And therefore maybe their lease liabilities is a little bit elevated. But so therefore they'll pay a rental. They'll do the capex themselves.
Yes.
of furnishing the property, etc. And then thereafter lease it out. But Office is in a very similar space.
Yeah, but Office does not take. So they have this agreement with the developer, and the last one which I heard, and if they have, I think I haven't spoken to them in a couple of months, but what I saw during the IPO, how they were different was that they would have a tie-up with of building category 1 building, where they're into basically category 1 building, and then they will tell them that okay, we will I'll give you a minimum guarantee,
Revenue share.
minimum guarantee or a revenue share which
Got it.
is there, and they will do initial expenses of it, and then they get monthly seat
Yeah.
per seat they
Yeah.
get it.
Yeah, when
So
I spoke with them on KYC,
you
they
did
said that
KYC with them,
yes,
right?
uh, that time they said that on that model where they are doing a revenue share
Hmm.
with the office,
Hmm.
the ROCs are as high as 35-40%.
Exactly.
And it's a 60-40 split.
Yeah.
So maybe go see KYC, you will know the exact
We should
exact
drop that
extra.
KYC here.
But it's
So,
very interesting because it's a different model versus a
so
Smartworks in
yes,
that sense
yes.
that they are able to garner a higher ROC on by doing this partnership model, which Smartworks for some reason is not doing. So
But the reason for that is that the uh, profile of the clients.
hmm,
The profile of the clients want category one buildings. Okay. So there you can go and say that, okay, I'm getting. See, what happens is that if you have a 10-story building in a BKC area like
hmm,
a BKC,
hmm,
and all companies want to come in because it's being the business district. The building also wants a profile of clientele coming in.
hmm.
So in that sense, you are able to drive a revenue share. In the case of Smartworks, they look at small and medium enterprises. So you may be a enterprise of 300, 400 crores company, but you have five or six or seven marketing offices across the country. You don't need to create a separate office for them. You just take 10 seats or 20 seats and do it. For that, you don't need a category one building kind of thing. So they take in key cities like Pune or Mumbai or any other. So Smartworks is there in all these cities actually: Delhi, Pune, Mumbai, Bangalore, Kolkata. They are opening, if I'm not wrong. So in those cities, they are there, but they are not taking the category one buildings.
So it's not as premium as an office,
Yes,
and they have a more fragmented
clientele.
clientele as well. So
Yes.
so those are benefits.
Yes, but those are also in some form a risk as well,
Yes, it
because
does.
in one go 26 will go off suddenly. Once a city marketing is shut, those kind of risks are there. There's no tie up of
Sure,
lock-in which is there in that sense, right?
sure.
Uh, so that's something which is it's a different model. It caters to a different segment which is required as well, but I think it's an asset heavy in that sense,
Hmm.
because in some cases they have taken the buildings, some cases they have taken the entire building and they're managing it for clients. In some cases they're only giving certain areas.
Yeah, but it's an interesting space to look out for, especially after what's happened to WeWork.
And
And
WeWork IPO is coming, by the way. WeWork
yeah,
India IPO is coming. It's not WeWork Global. India
yes,
Embassy is the promoter for them. They have
yes,
the franchisee in India.
yes,
So that IPO is also, I think SEBI has already approved, or they're on the, yeah, I think they have approved. So
yes,
that's also coming.
yes, yes, yes. So that's one. That's the other one. So yes. What else? What did you make of
And
Tech Mahindra's numbers?
oh, see, numbers were disappointing for me, but I would go by the uh, guidance that the company has given, that they will take 3 years to come back to those levels. So we'll have to
Three
give them
years means FY27. So 3 years
27
from FY24.
4
Yeah.
after the new CEO has come in, because that's
Yes.
what Anish said. That
Yes.
numbers are not going to be anywhere near the top tier companies. They
Hmm.
want to go to that level, and that's a gradual build which is there.
Hmm.
So numbers have not been so uh, good in my sense,
Hmm.
because as a whole industry has also come off, but Q1 has been a little tough for many of the companies, and Tech Mahindra is also the same thing. So I've seen some of the analyst report which said, oh, it's in line with their numbers. uh, could be, means I'm not, analyst numbers are supposed to show the baseline or something, right? And then they say, but if you look at on a quarter to quarter basis or Y to Y basis, the numbers are not so encouraging. But what is encouraging is that it's a direction which they have taken, and the flight part, you need to look at it and you have to judge it from that. So it's a leap of faith as of now till FY27, if they are able to meet those ROCs and margins and the revenue guidance which they're talking about.
Yeah, it's going through a difficult time, the business overall.
IT
And
companies,
telecom,
LTTS is very bad numbers again.
Yeah.
Um, you know, I was, and it stems from one single thing that what TCS has said, that they suddenly saw demand contract in Q1. They hired 6,000 net employees, and then they saw the contraction of demand happen so fast that those 6,000 went into the bench. And this is despite the fact they have a 2-year high attrition, right? So from that perspective, it gives you a good idea of how the entire thing is working.
Yeah, it's just a very difficult time for IT, I think overall. The other worry also for me, for from a Tech Mahindra and an IT standpoint overall as well, is there's very little valuation comfort. It's not like the stocks have done badly; they've done quite well for themselves, and there's no growth.
Yeah, and Tech Mahindra is, I think, if I'm not wrong, is valued at the same as the tier one TCS or Infi or
Yeah, it's running
Sectoral
ahead of itself
itself,
because
which is the
everyone's discounting to FY27.
F27.
And I don't know how you look at this, right? So, one, the pessimism of investing in IT comes from the fact that there's just no growth there. So, what you would therefore rely on is something of deep value, which comes to fair value. और deep value कुछ है नहीं.
नहीं ऐसा
Growth
नहीं है
mid
मीन्स
और small
ओके
में है.
लेट्स
Mid
लुक
और small में
लेट्स
growth है.
लुक एट सो ओके while we are very focused on the company to company growth, I think TCS grew at 6% top line last year. Is it going to grow the same 6% this year? The answer may be no. They will grow at 3 to 4% maybe in this year. And that too is dependent on two factors, which is there. International business is going to grow better than last year, and domestic business is dependent on the BSNL order, which if they get in the second half, it will show a bump up which will come in. So maybe they end up with the same kind of growth, which is there. Margins, are they able to maintain the margin 24-25%? They've been talking about 26 to 20% as the optimum level for many years now. Now वो तो अब now it's just like a peak. अच्छा हमको कभी पहुंचना है उधर, वो कभी होने वाला नहीं है. But my point is that I think they will be able to maintain about 24% margin, and everyone is now moving to a wage cycle of September to September kind of wage cycle, which is there. Now we saw many of the companies talking about normally April Q1 is the wage cycle, but everyone
Correct.
has shifted it right in that
Correct.
sense, unless you suddenly see a demand spurt coming in, and then there is a certain supply issue which comes in, like we saw post COVID, where suddenly supply of manpower was a big issue, and attritions peaked for many of them, and so they had to go and spend more. That is the only challenge which is there, and that will only come if there is suddenly a demand which is going to come in. My sense is that in the second half it may come in, because if Trump thing ends by July 31st, and we have a certainty of what's happening globally, then you're going to see some kind of demand revival happening in the second half.
What if we were to zoom out? And producers have put up a very interesting question. Guys, by the way, y'all have to hit like, because that's the prerequisite for us to take questions
Yes,
from you guys.
yes.
But producers have put up a question. Nifty at 30,000. Is
Our
it
producers are very optimistic.
is it a reality or is it impractical?
At some point, yes. I don't know when.
That is the golden question, producers. It's actually about when rather than hitting
Yeah,
thirty
because
thousand or not.
Niraj has a bet going that by September of 2026 it will be 28,500.
Yeah.
And I have said that by September it would be around 27,500. So no, that's not even 10% from where we are actually.
Yeah.
In that sense. But the point is that we don't see a earnings revival happening in such a manner that it will surpass. Now today I think City has gone and downgraded the India from
Yeah.
overweight to neutral or something, if I'm not wrong. Now that's coming on the back of even, and that's if we haven't even hit halfway through the earnings. The trends are such that the earnings are not coming up to the mark.
Yeah.
Especially even banking earnings are not coming to the mark basically.
No.
So
I
So
mean, the main
so
earnings are this weekend, but
this
yes.
weekend, yeah, but overall for the index, if you're looking at 10% earnings growth, which is looking very difficult. At the beginning of the earnings, I was saying 5%. Now, if even if we hit 5%, then we are talking about 27,500, because we are looking at 22 times earnings,
Yeah.
right?
Yeah.
Forward earnings we are talking about. But if we are not going to hit 5% also, then we are looking at even much lower level. So we are going to languish for a period in the next 1 year for between 25,000 और 24,000 to 28,000 के बीच में हम घूमते रहेंगे जब तक अर्निंग्स वापस नहीं आए.
I think the underlying takeaway from this, at least for me, is that it's not going to be a top-down market. It's going to be a very much a bottom-up market. You'll have to identify specific opportunities within the market to try and figure how to outperform, because the market is not going to give you some significant returns because earnings upgrade from a market perspective is not happening.
Today, if I have to say that, okay, where do I look growth in the market? I don't think Nifty 50 is the index to look at. I think next 50 is the benchmark to look at,
You've been
because
saying that for a while.
I've been saying this for a while, because the firstly, it's not skewed towards financials. 33%
Financials and IT, guys,
account
are
for
just
50%.
50%.
50%.
50 to 55% of the index is financials and IT. That is not going to, or maybe at least on the banking side, maybe on NBFCs it may fire. But on banking, it's clearly not going to fire, because margins are going to come under some bit of pressure. If not, even if they maintain it, I'll be really happy.
50% of the index, if it's banking and IT together, and then you have FMCG again a slow, which is around 8-9%. तो आपका 60 almost 60% वहाँ
Yes.
पर हो गया.
Yes.
Metals are going to be low this quarter. Then बचा autos, anyways, is a slow lane which is there.
Yeah.
And I think two CVs, anyways, if you go by HDB Financials commentary, then CVs are not going to do well this time.
Correct.
Because they have been facing issues with respect to CV financing.
Yes.
So then no one is, so CVs are not getting sold.
Yes.
So your Tata Motors, your Ashok Leyland, all those are going to have a big issue which is there.
Yes,
So
that's true.
So your 60-70% of the index is not growing in a big fashion.
That is true.
So
that is very much true.
But
So,
what, I was surprised with one result, ITC Hotels.
Yeah, very strong numbers.
Very strong number despite a disruption. And I think the street has been taken off guard on that. The reason being, firstly, we didn't have the last year's numbers. We only had Q4 numbers to play with, but it seems the base effect is also going to play in, because
Yes.
in the last 1 year they've been able to add a lot of properties and a lot of keys, and that has led to higher top line which is there. PAT has grown 32-33% of EBITDA margins, which is okay, very good margin for them actually, despite the fact that May has been a disruptor for them. So
And this is a stock where the list price was around 270. The stock fell to 170, which could have been taken as or rather 160, which could have been taken as an opportunity.
Yeah.
And now the stock has rallied 50% from there.
Yes.
So bottom up stories seem to be working at this point.
True. And what is the kicker is yet to come in, because in the next 3 years you have the addition of hotels through management contracts, which means that your top line may not be growing at the same level, but your EBITDA and profit will be growing at a faster level, which
Correct.
is there. So
Correct.
that's also something which needs to do. What
But
exact?
keep your eye on the multiple, because the multiple has expanded very, very rapidly. Would you compare this to an IHCL? Yes, 100% you would compare it to an IHCL, but it's not like IHCL is any cheaper. And therefore, just keep your eye out on the multiple is what I would look at.
Get what you're trying to say, but my point is very simple here. The growth, if you're going to go for growth, then you should be looking at what's going to happen in 27. So
Yeah.
what we saw happening in IHCL or Indian hotels in the last 3 years, how it has rallied, the transformation of an asset business, heavy business, to a combination of asset and asset light business, which they have now gone into, has led to a expansion in multiples also, right? The same
Yes.
thing is going to happen for ITC.
Yes.
When ITC Hotels was listing, we were giving a discount to Indian hotels. Now it seems that they may be catching up on that valuation with Indian hotels. So that's something to watch out for.
Okay, so yeah, so that's with regard to a couple of those names. Anything else in earnings that's standing out for you?
No, there's a IPO which is coming, Anthem, which is which is happening, right? Anthem, which is
Yeah. Okay. Sorry, I'm not aware of this, but
so
you.
that's an IPO. Anthem Biosciences, CDMO player.
Hmm.
80% coming in from CDMO. They do work for new chemical entities and new biological entities, which is there. So it's an end-to-end player, which is there. FY25 price to earnings is 70 times. Looks little expensive for me, but the kind of growth they are sitting on, they've been growing at 30% top line and 30% bottom line also, if I'm not wrong, which is there. So I think if you discount for future, then it's around 45-50 times in the way, simple as that. So the decent IPO, I think, and it's been subscribed on day two. I think today is day three, if I'm not wrong. So it will have good subscription for Anthem coming in.
So we have a question coming here from Kalyan. He's saying that what's happening in the market? Something is bothering the market. Nifty is protecting due to expiry, but from yesterday, mid caps are falling from the highs. Something seems to be cooking. Are you feeling that as well?
No, I'm not feeling that as well. I think
Nor
that
am I, frankly.
I think there has been a decent rally for mid caps in the last few months. So from that point of view, mid caps, even if there is a correction, which is I feel that's healthy for mid caps. But if I look at what Nifty mid cap has done in last one or since the beginning of the year, basically, Nifty mid cap 150.
So okay, so while,
Yeah,
while Sajeet sir
yeah.
is okay.
So look at what they've done. Jan and Feb were bad months for them.
Yes.
6.5% down, 10.11% down. Then March 7% up, April 4% up, May 6% up, June 4% up. July it's been
Fabulous
flat.
rally. Fabulous rally.
So so
So
after nearly 20% rally from the year's low, if it's giving up some gains, it's okay, I
yeah,
think.
and it's not actually. July doesn't look bad. It's
July
flat.
flat.
So it's not giving up any of those gains. But Kalyan, and viewers, this is how I would look at it. And Sajid sir, please tell me if I'm looking at it wrong. Are valuations on the expensive side in the broader markets? Yes, for sure they are. For sure they are. But the question, therefore, is that you have to be in places and pockets where growth will be higher, right? And valuations are fair. So you're paying the right price for growth. That is going to hold the key. And keep a margin of safety, because valuations in general, when they are elevated, there is a larger risk that
The bigger risk
that an
is that
index may correct.
if you hold some of the stocks in such a fashion that and it becomes risky because there's an earning surprise comes in, then you are in for a big surprise, because then you lose money. Today we have a lot of ETFs for mid cap 150. The best way to play in an uncertain market is to invest in an ETF, because the fund manager is going to do his work. Because at the end of the day, he has to generate alpha, and he will generate alpha. Whatever it is, he will churn his portfolio accordingly, and he will ensure that it's in line with the index. So if mid cap goes all out, or tomorrow the biggest surprise will be the mid cap earnings are much lower than expected, which is not, because many of the capex which has happened in the last 1.5 years, many of it's come on mid cap companies. So they are looking at increasing their capacities. I'm talking the manufacturing side capacity by 25 to 50%. If that is going to happen, then there is a earnings growth which is there. Now only thing is that where is it going to come from? So if you are uncertain about mid caps going forward, because after 20-25% rally, you don't know where to do, and I want to book. Maybe individual stocks you can come down and you can talk about, okay, let me take an ETF as a protection,
Yeah,
and then hold on till I have a visibility on the earnings for the mid cap.
that should be the strategy. I think the strategy should be you look bottom up. If you're not able to find, just do an ETF. That's a far better method to everything that's happening.
Begin is asking on Ixigo, Aj, what's happening? Why is it on fire?
Well, it's just the quality of the numbers, no, sir. When you have the kind of numbers that Ixigo has posted, you start to see that the tailwind for growth is strong. But at the same time, again, I would like to caution, and we caution viewers on the KYC show as well, that valuations certainly don't look cheap. I mean, you have other players in this space which don't.
Okay, let's talk. We have Ease My Trip. We have
Ease my trip. Sorry to say,
Ease
but
My.
it's not a benchmark for a player, unfortunately.
I'm the player. Player is there.
Unfortunately, yes.
And then you have Yatra.
Yes, you have Yatra.
Then you make my trip is not listed in.
You have a Thomas Cook, for example. It's not a platform business, but it's a business which is similar.
So from a platform point of view, there are only two, right?
Correct. And then you have Make My Trip, which is foreign listed. Both of those are trading at sub 50 times, whereas this one is trading 1 year forward 80 times.
But Ixigo is profitable.
It's profitable, and the growth is stronger in Ixigo. They are doing B2C versus a Yatra, which doesn't technically do B2C.
I'm a little surprised that Yatra and others, everyone is trying to tap the airline market.
Yes.
Their biggest revenue segment is the train market.
Correct.
Right?
Yes.
And within train, they've been able to get much better realizations going forward because my understanding. I don't know, you spoke to them and you tell me what exactly they said. But when I spoke to them a couple of months back, they were talking about that train segment seems to be very low hanging thing, but it's not. It's they are the best search engine for train ticket booking.
They are.
In that better than IRCTC.
The interface is clean. I've never used it, sorry, frankly.
I have people I've tried it out.
But you've tried it out.
And
we have a couple of people in office, including a Mahima who tracks this space closely. And I asked her that, IPO price 93, this could have been like a really good opportunity, right? And we could have like called it out. But the point is that at that point of time, to visibly see 1.5 years forward and see what kind of growth this one will clock was difficult to do. Now there's better visibility of growth, but the price is just shot up, right? It's up 110% from the IPO price.
And I think it was profitable then also.
Yes, it was profitable then as well. It has been profitable last 3 years. We did the KYC, so we kind of
So it was
highlight
it was the old. I think Ease My Trip was the only one which was profitable, and Yatra was loss making when they listed, and Ixigo was profitable. But Ixigo has a very stable train business.
Yes, it does.
Which
around 40% of his business is trains. Around 30 to 35% is flights, and then you have hotels and buses, if I recall. Yes, so buses, yes, I recall, but hotels and others is just a very small part of the business.
Those are ancillary.
In fact, those are great levers. So I asked that question to management, saying that. So they are saying yes, we're working on it, but he didn't give me anything meaty to be able to really understand what the guidance will be. So that somewhere has left me somewhere on the fence.
And this is despite so he has a very good hedge in that sense because we're going to see some kind of disruption to airline business in Q1.
Yes.
They have a smaller airline business and bigger train business, so they have been able to protect themselves in this quarter from that point of view.
Yes.
And from platform business, if you're able to scale up, then your multiples, what you said, that it's doubled in almost 1.5 years.
In 1 year. 1 year exactly. 11, 12, 13 months. 13 months exactly.
What else we have? We have great show. Could you Nessie Hamza? Nessie is new, I think. Thanks, Nessie, for joining us. Great show. Could you please share your thoughts on Minda? Spinner shows P of 70 looks like expensive. Please share your thought. Yes, 70 is expensive for Minda. It's an auto ancillary company.
Yes.
And they are these companies are facing some challenges. 70 is but keep a watch out for Q1 numbers and then have a look at it. I hope. I don't know what.
We'll probably do a review when.
But the that's a good. Did you do a KYC?
No, I haven't done a KYC on.
Maybe a good.
Yeah, some of the auto anchor we've done KYCs on, and I mean, they've never interested me in a big fashion, but after I did the KYC, it really piqued my interest. Some of these auto anchor names, because they all, and see, I mean, this is very general. Okay, so don't take this as a, as a Uno Minda kind of a story. But all of them have such a niche, so in each of their segments. Some of them are top three globally in each of their segments. So that really stands out for me. That if you're top three globally, right, where is demand going to go eventually? You're going to only acquire competitors, whether it's organic or inorganic. Multiples abroad are not the same as multiples in India. So some of them trade at really expensive multiples in India, but they are acquiring businesses at fairly cheap prices, and then they are further optimizing that business, right, branding it as the Indian brand, and then thereafter driving the numbers and leveraging on those numbers. So there's some very interesting plays which are happening there.
I was looking at Nuvama note, and they're talking about CAGR revenue growth of nearly 18% for Minda from 25 to 27, and market share gains driven by import substitution and growing content. So the earnings CAGR shall be higher 26% on a ramp up in utilization of new plants. That's what they're talking about.
And they're giving this a target price of 1300 based on 50 times earnings.
50 times FY27.
I'm just going to quickly check for you what the upside is. That's nearly a 20% upside. 1100 is the current target price. So okay, maybe not 20, maybe around 15 to 16% upside, but that's FY27, mind you. So we're looking at maybe the next maybe in the next 10 months or so that
Yeah,
kind of a return
Q1 is going to determine a lot of stuff for many of the companies, actually.
It is.
Because it gives you a trajectory of where the earnings are going to come in.
And the commentary, most importantly. So we'll try and
Begin is talking about
Hexaware.
Yeah, Hexaware has announced a 1,000 crore acquisition of a GCC. It's interesting one because IT companies are losing some of the business to GCC, and here Hexaware has gone ahead and acquired. I think next week is when the management is going to speak, so we'll get more details about this GCC thing. MPJN, I wonder if either of you has any idea on the company named EFCIL. Do you know what? I believe this too is in the office space segment.
It is.
It's in the co-working?
It's in the co-working.
Okay.
In leasing of office spaces.
Okay, leasing of office spaces. Okay.
I had a very brief chance to look at it, frankly, Mr. Jain. But I mean, what I'm going to do is I'm just going to add it to my KYC list and try and do a deeper dive, because looking at anything in depth is proving to be difficult outside of KYC. I'm going to try to do that, and earnings is upon us, so that's the other thing.
Ajay is asking a question on TCPL packaging. Have you done a KYC on that?
No, I haven't.
No, I don't have.
I haven't. Maybe Agam has, but I haven't. So yes.
TCPL. I don't think we have done anything on TCPL, but we can have a look and come back to you on that. Jash Engineering, yesterday I asked about overall sector water. Suraj, the thing is that this entire water sector is dependent on government orders. And that's something, I think a couple of companies are dependent on that kind of work which is there. So it all depends upon how the orders are flowing, whether it's central government orders or state government orders, which is there. Because this entire thing of capex flowing through for urban mission, either for water, both the sites, you'll have to look at. I have to see how much of that revenues are coming from government orders and how much they are able to do it. But let's see and come back to you. With the increased threshold in investment in green energy, how does it position NTPC Green vis-a-vis competitor? I think NTPC Green is one of the largest public sector green companies, and the other one in the country would be Adani Green, and then you have a couple of more companies, which private companies which are not listed yet. I think we have been very clear on the green part of it. Uh, we have achieved 50% of our total power demand from renewables 5 years ahead of the target. And that's what the government has said. They were talking about meeting that by 2030. We have done it in 2025. 500 gigawatts we already have. Of that, 250 odd is basically renewables, and solar is the maximum one, means is the maximum. Going forward, we are looking at 500 gigawatts of renewables or solar coming in by 2030. So you're talking about 50 to at least 50 gigawatts coming in every year in ordering. um, and that gives you a good run up. NTPC Green itself has around 14 gigawatts of projects under a pipeline, so they have to deliver that kind of projects over the next 2 to 3 years. So it has good parentage. There's no issue of capital for them. NTPC is the parent for them. So the group itself is looking at around, if I'm not wrong, 35 to 40 gigawatts addition, which includes thermal, hydro, some part of it. Then you're talking about uh, power, solar, and some bit of wind, which is there. Plus, if it happens, I don't know whether they're going to go into nuclear through green, but NTPC is going through that. So that's something which is there. 35-40 gigawatt of capacity addition for that group is a big one coming in next 3 to 4 years.
Reliance, where do you put it? Do you put it in FMCG, retail, or telecom? This is Kalyan who's asking. Or Kalyan, you've forgotten the main segment.
Oil and gas. you know,
Oil and gas and new energy, of course. So yes.
you know, the bread and butter for Reliance is the petchem,
Yes.
O2C, which is called oil to chemical business. That gives you the cash. Rest all are the businesses which are coming in, and now I think almost 50% of the EBITDA is coming from consumer businesses, which include your geo and then your retail, which is there. These two IPOs are delayed. When is it going to come in? I don't know. And by the way, I'm saying it an IPO. It could be a demerger as well going forward, because that's how you're going to create value for the shareholder of Reliance Industries, right? Because if Reliance Industry is going to go for an IPO for these two companies, then Reliance will start going into a holding company discount. That is going to be bad for the retail investors of Reliance, who have been, you know, uh, in a parlance incubating these companies, right? Because my intrinsic value is going to come down, because the value.
But that's not how they did Geofinance, and
they
therefore
did a vertical split there.
Yeah.
1:1 vertical
But
split.
but wouldn't you expect that to be
That
the
should be
case
the
for?
that should be the ideal case.
Yeah.
But they have, I get where they may be getting stuck. These two companies have external investors.
Yes.
It cannot be a 1:1 split here. It will be something like what ITC did with ITC Hotels.
They will own some part, and
No, they will not. The investors will own some part of it, and the remaining will be shared with the ITC, Reliance shareholders.
Okay.
Okay. The question is how much they're going to own in that.
Fair.
So today, if they have, say, 20% or 15 or 20% stake in that company, in the vertical split, it's not going to be 15. Now they will need to have those 20%. So you're talking about.
So the balance 80 gets divided among all shareholders.
That's an ideal way to do it.
Yeah.
But I don't know what is the thinking. They've been talking about unlocking shareholder value. That will come in at some point in time, when it is not sure. And if you're a Reliance shareholder, you know for a fact that at the end of every capital cycle, they come out with awarding the shareholders.
Yeah.
And I think the new energy capital cycle is still a year or two away. So we don't know about that part of it. But they've spoken about for last few years that they will unlock value for Geo and what do you call the telephone and the retail arm. And now there's certain reports showing that they may do a demerger of the FMCG business, which, by the way, it's again is a big FMCG business for them, because it is very heavy on Reliance retail. So maybe one way to lighten up the entire retail pack is to move away the manufacturing part of FMCG away, so that you can make Reliance retail look better on balance sheet. So that could be one of the ways to do it. We don't know whether the demerger is going to happen, but there are reports about it, and there's no denial or confirmation on it. But numbers are tomorrow, so keep a watch on what commentary comes in. What else we have? We have pair trading in Nifty and Nifty Bank Nifty is just working in this market.
Uh, so we've got another appreciation. Mr. N is saying that always like it when I watch it in the evening. Today got lucky enough to watch it online live. This 30 to 40 minute warp and KYC is my favorite progress these days. Thank you
Thank
so much,
you.
Mr. N. Uh, Suraj Jain is saying that best way to invest in AIF fund. Any guidance how to start about it? You have a view?
AI fund.
Yeah.
I don't know. Yeah, I mean, you will have to look at. Firstly, you need to have a minimum corpus for them,
Yeah.
a crore or something,
But
right?
maybe he does have that.
Uh, so so
Suraj,
look at
past returns. I mean, isn't that the
yeah,
best way to look at it?
it is. It is
Go
the
meet the fund manager because AIF is so personalized that you'll actually
yeah.
be able to go and meet the fund manager if you want.
You're putting one
Uh,
crore on the table. He will come and meet
he
you.
will come and meet you. Yeah, I'm sure he
Not the
will.
other way around, actually.
Yeah, either way. So someone will come and meet you. Someone from the management, from the fund management team will come and meet
But
you. And
make sure that look at the portfolio of the companies. Many of the
yes,
companies have unlisted companies as well. So look at what is the timeline, exit conditions which are there. What is the kind of uh, commission structure, profit sharing structure, all those things which are there. So if you have all those things in place, then it's and if you're comfortable with it and you want to stay long for 5 to 7 years, then I think the AF makes sense for you.
and Suraj again asking, is this market a buy on dip market? I think so, Suraj. Sorry. So if Sir has a view, I don't know.
No,
But
well,
I definitely think it's a buy on dip because the amount of flows that are coming in, sir, it's very difficult for us to ignore the flows. Every dip is being bought into. At the same time, the flows are also respecting value today. So it's not like mutual funds are going out and buying big. When they're getting good value, when they're getting good deals, that's when they're going out and buying. So
I agree with you that MF is now driving value.
yes,
Simple as that.
yes.
And they're getting in only if the value is given to them in that sense. Because at
Hmm.
the end of the day, they're sitting on so much of inflows and so much of AUM that they have to generate returns on that. So it becomes very difficult if you have a large AUM and then you have to generate a return, right? In that sense.
Hmm.
So they are driving value for sure. Is it a buy on dip thing? Individual stocks, I don't know. Means I'm my view is that the earnings surprises are coming in every day, and it may be if you buy now and before the earnings, uh, it's really a surprise that comes through. Then you may lose money.
Hmm.
So hang on for a bit to understand. This market is not going anywhere. Means if you look at the street in general, everyone is talking about at least 1,000 point or 2,000 point rally at max, and before that you'll get to know where the market is headed or where the earnings are headed. So fundamentally, if you want to do it, again, I will not tell you to invest for short term because you shouldn't be doing that. As investors, you should look at long term companies and long term strategies, and do the due diligence. Listen to the con calls of these companies. Now everyone is putting out their con calls on their website and on the stock exchanges. Go through the transcripts. What are they saying? Are you convinced with what the management is saying?
Hmm.
That is what, many a times management may be bullshitting.
Yeah.
Let me put it this way. But you need to cut through and say, ki, is he taking me for a ride, or is he really putting? And some managements are very cut through, saying that, oh, I'm facing a problem, and that's it, and I feel 3 months or 6 months is a time when I will come back. Are you okay with the management being so honest and saying that, okay, he will be able to come back, and is there a track record of management coming back? Then you take a bet on the management.
Yes,
Simple as
yes,
that.
yes.
So those are the kind of things which we need to do. Is there any other question?
Okay. We have too many
Two.
questions actually.
Okay.
We aren't able to take all, but what we
Yeah.
will do is we'll address some of them on India Market Close. I will take them today for sure.
Yeah.
And but for the moment, we're
Yes.
out of time. You have something you want to say?
No, no, nothing. I think there are lots of questions which Kalyan and Piyush and
Yeah.
Balachandra is asking. Maybe you can pick it up.
We will pick it up on India Market Close today.
Thank you.